Generational wealth is defined as the passing of economic resources from one generation to the next. This includes the handing down of financial instruments such as money, investments, stocks, bonds, real estate, and family business. In the current climate, intergenerational wealth has become a major talking point in debates on wealth inequality and the rise in wealth concentration around the globe, as it is seen to be a main factor in both. Generational wealth is something worth building and investing in for your family. By creating generational wealth, you'll be able to provide your children and grandchildren with a more sustainable and secure financial future. And as the world becomes increasingly unpredictable and unstable, this is something that should be a part of your financial practices. Therefore, Money Utero has put together a list of practices for intergenerational finance. There are a number of ways to create generational wealth. One way is to invest in a family business. This is a great way to pass on your knowledge, skills and experience to future generations. Also, family businesses tend to be recession resistant, which is a valuable trait in uncertain times. Another way to create generational wealth is through property investment. By buying and selling property over the years, you can generate consistent income that can be used to help finance other investments. Build a portfolio of assets that will grow over time. You can also create a family foundation to support charitable causes or educational initiatives. How to build wealth through investments. Building generational wealth for your family does not have to be complicated. If you want to start building the wealth for your family, the first thing you will need to do is to find an investment strategy that doesn't lose money. Investment strategies that don't lose money are called investment vehicles. Investment vehicles include stocks, bonds, and money-making funds. Types of investments. This is one of the most important things you need to know about investing. There are 3 types of investments: equity investments, which are stocks, debt investments, also known as bonds, and money market funds. Equity investments, stocks. Investing in stocks is one of the most popular ways to grow your money. But what exactly are stocks? Stocks are units of ownership in a company. When you buy stocks, you are buying a piece of a company, which makes you a shareholder. When the company makes money, the value of your stock will increase and you will reap the benefits. Stocks can also go down if the company is not performing well, so it's important to do your research before investing. There are many different types of stocks, from blue chip stocks to penny stocks. Each type carries different levels of risk and can be bought and sold in a variety of ways. Investing in stocks can be a great way to generate income and build wealth over time, but it's important to understand the basics before taking the plunge. Bonds. Bonds are an important type of investment that can be beneficial for anyone looking to diversify their portfolio. A bond is essentially a loan, where the investor is the lender and the issuer of the bond is the borrower. When you buy a bond, you are loaning money to the issuer, and in return the issuer is obligated to pay you interest on the loan. The interest rate and the length of the loan are set in advance, and when the bond is matured, the issuer must repay the original loan amount. Bonds can be issued by governments, corporations, and other entities, and can be used to finance their operations. Investing in bonds can be a great way to diversify your portfolio and to protect yourself against the volatility of the stock market. Bonds also offer the potential for steady returns and are generally considered to have a lower risk than stocks. Before investing in bonds, however, it's important to understand the different types of bonds and the associated risks. Money market funds. Most people have heard of money market funds, but may not know what they are. Money market funds are a type of mutual fund that invests in a variety of short-term debt instruments. These include treasury bills, certificates of deposit, commercial paper, and other short-term debt. Money market funds are highly liquid and typically offer higher interest rates than other investments of similar risk. They also provide diversification since they are made up of a variety of debt instruments. For these reasons, money market funds can be a great option for investors looking for a low-risk, liquid way to diversify their portfolio. The downside of money market funds is that they can be a bit more expensive than other investments. But for investors who are willing to do the research to find the right fund, the potential rewards can be well worth it. What is a company worth? Investing in the right companies can be a tricky task. It's important to do research before making any decision, as this will help you identify the corporations that have the greatest potential to bring you a return on investment. To start, you should look at the company's financials as well as consider their business goals, strategies, and market outlook. Are they ethical? Environmentally friendly? What's their carbon footprint? This will help you determine if the company is well positioned for growth and success. Another important factor to consider when investing is the company's management team. You'll want to make sure that the company is led by a team of knowledgeable and experienced professionals who are committed to the firm's success. Finally, you should also look into the company's competitive landscape and make sure that it has the potential to gain a competitive advantage. By doing your research and making sure you understand the company's goals and outlook, you can ensure you make the right investment decisions. Understanding the bottom line. As you can see, building generational wealth is not as complicated as you may think. All you need to do is to find an investment strategy that doesn't lose money and worthwhile investment vehicles that will produce profits over time. Take the time to research companies and pay attention to their track record, corporate values, and their utility. Thanks for watching. Hit like and subscribe if you enjoyed this video.